Hello everyone, this is Evan here from the Trade Risk on Wednesday, October 4th, here with a midweek market recap video. We're going to cover all of the major markets, the current market environment, and then finish off looking at some sector analysis. Now, today's video could be a bit tricky. My laptop suffered a fall this weekend from the living room table to the floor, about 3 feet or so, but it was enough to crack the screen, and I have a nice sort of gnarly looking multicolored pixelated band on right where my mouse is on the about 25% from the right of the screen here, running all the way up where I can't see anything, and then the bottom of the screen is all sort of blurred out as well. So I could be missing some key ingredients here to these charts. If you see me fidgeting with the time frame, it's probably because I'm trying to get a view of what this bar looks like right here. Luckily, this is not my main trading computer, but I do my recordings on my laptop. So it could make it a little tricky. Maybe I'll cut it short if this is not working out from the market recap standpoint. I've already ordered a I've got the sort of replacement and the solution coming hopefully by this weekend. So I think we'll only be potentially disrupted on today's video. So let's kick things off here with some market analysis now. With the SPY ETF, you can see we crawled higher today, up 12 basis points. That's 30 cents here in the SPY ETF. And if we go to the weekly chart, you can see we are trading at all-time highs. We've started this week off on a positive note, extending this rally to the upside. And in fact, all of the major averages have extended their rallies to the upside this week. So bulls staying very much in control here. You can see up nearly 2 points here on the SPY for the week, 77 basis points, extending away from that fast 8-period moving average here on the weekly chart. Things look good structurally. That trend remains very much intact. Back on the daily chart here, you can see we're now actually up 7 days in a row in the SPY ETF ever since breaking out above this 250 level, to all-time highs here late last Friday. We continue to extend that rally north this week. So where we stand really when we look at sort of those three components that we sort of always bring it back to, trend, momentum, and breadth, you can see trend, of course, to the upside, higher on all time frames, up and to the right. Momentum still holding strong here for the SPY ETF. You can see just really continuing to push the accelerator there on momentum. And breadth holding up, still fairly long in the tooth on many metrics, but still in sort of line with price action, trending higher, new highs, still getting it done. Advanced decline line maybe slowing down a bit, but once again, still pushing higher. So from my perspective, the comments and commentary from Friday still pretty much applies. Our thoughts and analysis from the weekend's video. I was hesitant on this market here on Friday, saying we need to be selective with new exposure, just given sort of the run we saw, particularly in the small caps and some of the individual sectors that were really on fire there. My sort of analysis was to be selective in those types of names, careful on new exposure, but respect the trend, trail the stops with the positions that you're still in, and note we could continue higher. So that pretty much still applies. I'm still being very selective here in my own trading, not doing a whole lot at all, in fact, letting the positions we have on continue to sort of work themselves out, but not very much aggressive on putting on new exposure here. So I want to respect the trend, but I also want to respect the fact that we've covered a lot of ground in some of these individual names. Again, or sectors. The SPY may not represent that entirely. Certainly it's up 7 days in a row. It's a bit extended here. The VIX is back below 10. It's kind of been hanging, I think, below 10 for a few days at least. I think it was up green on the day today, and I don't think there it is. So the VIX loaded there. Yeah, so we're below 10 still. You can see getting a little bit of a bounce back here today, and in fact yesterday. So the VIX is higher on the week. The SPY is higher on the week. So I don't have anything that suggests, or I'm not trying to suggest that because VIX and SPY are higher, that's some type of sell signal. Not something I look at. Really just sort of pointing out the positioning of the VIX, saying it's back below 10, kind of in that more or less complacent levels where we've arguably been all year or for the majority of the year. But maybe complacency up here is something that, again, could be documented by a low VIX. You could look at that put-call ratio. I know you could look at the fear and greed index by CNN, for example. That's, I think, at multi-year highs. So there are some, some frothy things here. Again, it doesn't necessarily mean we can't continue to grind higher, especially if this market wants to continue to play the rotation game. So the S&P 500, I think we covered up pretty well there. The IWM did have a red day today. I think it snapped an 8-day winning streak here. And I mean, frankly, it's basically been up for 20 days in a straight line. It had, some minor pauses in here, but it's really been on fire, and it really accelerated away from kind of the upper end of this channel here that it was grinding through for the past 10 or so months. So once again, I think this is very constructive action here on that intermediate long-term horizon. However, it's the short term again that has me concerned, just based on how much ground we've covered. So even some sideways in here for a week or so, or maybe a pullback back down towards 145. Don't really care which, but let some of these charts sort of reset and catch their breath. And then I think, once again, it speaks very well to perhaps the end of the year. I think it coincides with that seasonality. Maybe for the next 1 to 3 weeks, we could go sideways or pull back. This is my wish list, of course. And then that last month heading into December, after we've consolidated, maybe we see a nice, kind of secondary move higher, close out the year on those highs. Again, not saying that's a scenario that has to happen, just in my mind, kind of thinking about what this market could look like to wrap up the end of the year. So that's the Russell 2000. Again, just tremendous strength here, but again, sort of know where it's come from. And the NASDAQ 100, I'm still, we're still stubbornly sort of short this market right now, acting as kind of the hedge to the long positions we have on, and still a believer that this is, and in fact it is, the weakest of the major indices here. This is, of course, the NASDAQ 100, but it has not broken out to new highs here. That volume pattern is still suspicious. It's certainly getting close to these previous highs here, which we would have to call uncle on very, very soon. Arguably, probably, very close to potentially should have been calling this quits yesterday or today, but we're still hanging in here from this session right here. This is exactly where that where my screen is missing, but this bar here, which was last Wednesday, is where we put on that short. So we are underwater on it, and we're still hanging in there. And again, just very, very close to bailing out of this. But while we still have some other long exposure on, and while I still have the belief that this market can consolidate a bit, we're going to keep that on for at least tomorrow, and perhaps it will be an exit for us tomorrow. So the Qs, again, I think getting close to these highs again, and one of the few, I think, major averages, or one of the only major averages here that has not broken out to new highs. So something to still pay attention to there. If you look at some of those underlying, and we're jumping out of order, but you look at something like a Facebook, which kind of has that look like it could start to roll over, especially the way it closed today, down 91 basis points. You look at something like Apple, which is, it's hanging out, but still below the 8 and 20 period moving average. Google, so on and so forth, which looks certainly better than the rest here, but still closing here near the lows of the day. So be interesting to see how this shakes out into tomorrow and into the end of the week here. So that's the NASDAQ 100. That's the market environment overall. Again, to reiterate those comments, I think you need to respect the trends where those trends are strongest. And it is uniquely difficult, as I'm seeing it firsthand, to try and short this market. I don't think it pays to be aggressive one way or the other. I think you want to continue to, be mindful of those trends, manage that risk, have a stop, have a strategy in place that, of course, allocates to your risk management, and hopefully you are being selective in those new entries. depending on your strategy and time frame. So that's the market environment. Let's get into some other major markets here. TLT, let's see how it's doing on the week. Down just a bit, 28 basis points here. So far holding on to last week's lows, but still in a pretty vulnerable spot. The 8 and 20 period bearishly aligned above price, racing down. Never a good position to be in. See if the dip buyers can step in, but again, I would be very careful there. Same thing with gold at this point. This kind of retracement here is getting certainly long in the tooth. Maybe this is the spot it bounces right at this 120 level, which was a previous inflection point back here early August. But for now, I think you just really need to be more cautious than opportunistic here on the long side, just given the fact we are below some of these fast moving averages. We've got some higher volume there on some of the sell days. So let's just see how. Let's see the bulls kind of step in here and prove themselves before we try and blindly buy anything. Silver's basically the same comments, below 8 and 20 period moving average, which is bearishly aligned above price. Could it bounce here? Absolutely, but let's see if we can get a little more convincing price action or stabilization on these lows before we try and be too much of a hero there. If we go to USO, this is off to a rough start to the week, down 3.36%. Started with the gap down on Monday. USO is kind of in a bullishly aligned sort of state up here, hanging above the prior week's highs. We started the week off on a down note, gapping down, and now we're following through to the downside. So this breakout here is actually now suddenly in question. The breakout from the August highs right around $10.30. That would be this day here on September 25th, where we really got that breakout. That's now looking like it could be some type of false signal that turns into something that makes us, come back down and test the bottom end of this range here from August. So keep that in mind there. Looks like you got a move in development in the opposite direction in USO. So something that could be interesting for some of you guys. Natural gas can kind of, still now back to the bottom end of this range. I was going to say it's similar to oil's camp, but this has really started to sell off a little bit sooner than oil did. But this week, again, hasn't been a pretty week, down almost 3% here on the week, gapped up today and tried to hold a bit of it, up 1% on the day, but still you get that 8 and 20 period, which is above price, bearishly aligned as well. So the lows from August, right around here at 6.25 or so, almost tested them yesterday. Those are going to be important to hold. Otherwise, we have this very long consolidation pattern that could act as a very large continuation pattern to the downside, which would be pretty ugly for natural gas. So see how that shakes out over the next week or so, or basically how it finished off this week. So that's natural gas. That is, I think, everything that I wanted to cover on the majors. Let's take a look at some of the sector analysis. So we'll start with financials, which have been hot here, leading to the upside, one of the V-shaped kind of markets higher. You can see pulling back just a little bit today, closing on the lows, 46 basis points to the downside, but still quite a bit of room above that rising 8-period EMA. So this is the type of action I would like to see and welcome, is some of these very vertical sectors that have led on this rally higher over the past couple of weeks to pause, pull back a bit, and really just digest some of those gains. So I welcome more of this here in the financials. XLI, kind of similar situation, pretty straight line, although it did dance around here and reset itself late last week. So it is back off to the races, and some good volume coming in here on XLI over the past couple of days. Hopefully that is good volume and not something that is a more dramatic trend change, but needless to say, more digestion here, some sideways, again, very much welcomed. And IYT, kind of the same thing, a little bit of an outside reversal day today, tried to push higher into that 180 level, failed, reversed, turned red, closed on the lows, right near yesterday's lows. So something to pay attention to, that maybe a little bit more of a pullback is about to kind of sweep across some of these leading sectors. Now on the downside, or kind of what's reversing or coming back into rotation, are some of those defensive areas where you have XLP, which suddenly put some pretty good volume in today and almost engulfed, or certainly had an outside kind of bullish reversal day here, closing near, not quite near the highs, but closing above yesterday's highs. Still got a pretty tough arrangement of moving averages there, and you're below some pretty critical previous support right around 54.50. So the bulls have their work cut out for for them, but some very high volume coming in here over the past 2 days. So XLP might be, ready to kind of put in some type of bounce here. XLU, kind of similar situation. Nice strong day closing at the highs today, 1% to the upside. So some of these defensive areas that were beaten up a bit are starting to come back. Now, healthcare and biotech, I think, were a little more ripe coming into this week. Healthcare, if you recall, was a sector that we got long on Friday. I believe I made mention of that in Friday's video. If I didn't, it certainly went out to our newsletter subscribers, free newsletter subscribers. Got this trade update that we got long here on the XLV on Friday, and that is continuing higher nicely. We took half of that trade off today, playing it via CURE, C-U-R-E, is the 3X ETF on the healthcare ETF XLV, but playing that exposure there. But that was a name, that was a area of the market that wasn't so frothy like everything else. This had a nice sort of clean, methodical pullback here, and this is a price action setup that we trade quite often. IBB, basically a component there or a subset of XLV, but biotech specific. Again, not as extended as everything else, had this nice pullback extending itself higher today. So this is nice. This is a good spot of the market that, could see some leadership here or start to see some continued rotation on some of those overheated sectors. If money comes out of there, rotates into XLV, IBB, so on and so forth, and then some of those defensive areas. So I think that's it. I think I had one more name, but I don't know. I don't have it in front of me, or I'm not able to pull that screen up. So we're going to end it there. Thanks so much for watching. Thanks so much for listening. If you're new here, do subscribe to our YouTube channel and that newsletter that goes out on weekends. You can go to thetraderist.com/newsletter and subscribe to our YouTube channel in the bottom right-hand corner. Both are free. Simply keeps you up to date with all the latest analysis and content that we're putting out there. So hopefully you guys have had a good week. Thanks again for watching, and hope to talk to you again soon.